Yo, 365, shake my hand, shake my hand. Hope you guys are doing well and welcome to another Traders War Room number 81. We've been doing this for a very long time and the format is going to be the same today. I'm going to talk about what's going on in the markets, what I see happening, Fed, any type of sentiment analysis. We're going to be looking at about 15 assets today. A couple of currencies, a couple of indices, a couple of commodities, just to see what's cooking. Some of the charts I'm assuming are going to be about trade management. So you should already be in the trade with me. All my trade signals, I give them out on the channel for free, almost week after week. And so everyone should be kind of like following this kind of stuff. There's a swing trade setups that you can then build into during the week. Some of the setups might be new entries. Some of the setups might be compounding entries to old entries. So I'm quite excited to see what's going on. Off the bat, I'm a bear, been a bear throughout the whole of January. It's been very, very profitable. The world's going crazy. Inflation is going crazy. Central banks are launching a very coordinated attack on inflation. I just did a lot of tweets around this kind of stuff. So please do check out 365 on Twitter, because the stuff that I dropped there, statistically speaking, it looks like there's a coordinated effort from central banks to actually attack inflation. But if all these central banks are tightening and following the global currency reserve, which is technically the dollar, right? Then we are all in for a world of pain. The one thing that we have not done on the channel, which I'm aware of, and I promise to find the time to do, is to talk about the impact, right? The intended and unintended or unthought through consequences of monetary tightening, right? The unintended consequences of monetary easing, we're seeing them now. So this was 2020, and there's a lot of printing of money. Okay, this is what happens. Inflation goes up. Yeah, you get big pumps in risk on assets, stocks, Bitcoin went crazy in 2020. That's when the Fed opened the tap and printed money. But these are the unintended consequences. You get inflation that triggers recession, that sets central banks off on a crazy scheme, and the central bank's effects sometimes can create a depression, a great economic depression. And some people are saying that's where we're going. I'm still looking at the economic data right now. I'm not yet sure we are there yet. We're in a recession, 100%. Great depression, a couple of things need to happen first, right? But we are definitely on track, right? If something doesn't change, we might even get there. So yeah, there's a lot to talk about, and let's just start. So maybe let's just quickly do a quick sentimental read. And then after that, we'll then kind of like, sit through our war room, charts of the day, and then we can see, what's happening. Just a couple of announcements before I go on. Number one, in this market, cash is king. I want you to understand this. Cash is king. You have to be hoarding a lot of cash right now. Every type of idea that comes into your mind that will generate an income for you, that idea needs to be fertilized, watered, and there must be a systematic approach to what you're going to do with that money. And I'll tell you why. Cash is trash in inflation if you're buying stuff, if you're buying food, if you're buying fuel, if you're buying gas. Of course, cash, what 100 rands can do for you today, it might not be able to do for you in a month from now, right? Because the currency gets devalued as price goes up, right? So I get that. Cash is trash when you're buying specific things, things that cannot be considered as assets. But when I say cash is king, I am saying it's very important that during the peaks of inflation, the early stages of a recession, the obvious continued momentum of a stock market crash, crypto crash, real estate crash, housing crash, global market crash, right? That you're hoarding as much cash as possible and you're creating other streams of income for what's going to be the greatest buy. Wealth triples in value. I'm talking about multi-millionaires and billionaires. Value is always tripled at the dawn of the aftermath of a crash. So immediately after a crash is multiple low time great discounts on all assets, stocks, crypto, real estate. All right, And that's where most of the money is made. The same thing that you wanted for $10 is now $2. The intrinsic value of that thing is still $10. The only difference is because of the crash, it's now $2. I'm just making up a simple example here. But cash is king, because you don't want to start looking for cash when markets have bottomed out, because me and you don't decide that. The Nasdaq has fallen consecutively for the last 2 weeks at a much more sharper speed than we've seen since 2020. All right, we don't determine that pace. I can tell you when it's time to sell, when it's time to buy, when to enter, when to exit. I can't tell you the intensity of the selling, right? Well, technically we could. If we talk about volumes and all that kind of stuff, we can calculate that kind of stuff, but it gets complicated and it's unnecessary, right? Now, at the end of a flash crash is a magnificent climb back up where the asset has an imbalance between its intrinsic value, so what the asset is actually worth, and the pricing that it's at. That is the trading difference, or that is the climb that asset needs to make. Cash is king right now. You need to be getting a lot of cash, all right? I'm not giving you financial advice. This is not financial advice. But 7 people in 2020 listened to me rant like this when it was now time to buy Bitcoin. 7 people. I have 7. I'll find those inboxes and screenshots, and in the next video I'll put them up. 7 people went to banks to go borrow money because they understood that cash is king. And they bought at those bottoms silly personal loans and changed their lives. I'm not saying you should go get a loan. I'm simply saying you need to get your hands on some cash. Now, what we do on this channel is teach you every day how to get cash. Trading, simple. Get money from the markets to invest in the markets, right? So please, 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 please think about this thoroughly. How are you doing with your spending? Is there any way you could live below your means? Is your 10% plan working, where 10% of everything you earn is going into a bag somewhere? Because there's going to be multiple discounts, right? And when that time happens, the buying is fast and quick. And when buying happens at an institutional level, after a long-term crash, there's so much fear in the markets. There's retail fear. People are like, oh no, it's another bear rally, like I've been saying, but all of them have been bear rallies. That is where price goes up, but it's going to come back down. So by the time it's time to buy, you can imagine you're going to find a disillusioned market that believes in nothing anymore. All right. And at that moment, institutions are going to strike and wipe everything out and buy everything cheaply. So you need to be acquiring cash now, waiting for the right time to strike. I'm not promoting time in the market. I am simply encouraging a specific level of readiness. For example, I dollar cost average into my assets that I've given out on the Wealthy in 3 Years program. I've not sent out a new one to relax, right? Everyone has gotten the last one that I said maybe about 2 months ago, because since then we've been waiting for Bitcoin to drop below 20K. It's happened. If you read my last financial note, I said this out loud that this is going to happen. All right. So my plan was to dollar cost average about 10 to 20% of what I withdraw. I withdraw probably once every 6 weeks because I use swings, right? Unless if I have a really crazy, euphoric trade, and then immediately there I'll take some money out there and I'll dollar cost that out. Debit order. You can systematize all these things, right? But anyway, I digress. But as soon as Bitcoin went below 20K again, and it now looks like it's a sustained downtrend, I increased the amount I'm dollar cost averaging to those assets. So instead of 10%, I'm going 15% into Bitcoin, 15% into Ethereum, and then I'm splitting about 20% of the rest into different assets, right? There's literally no need for me to be buying new clothes, or you live your life how you want to live your life, but assets are prime. But the cheaper, all I'm trying to say is the cheaper this thing becomes, the more I start to dollar cost average into, because I don't want to miss the bottom. Then when the bottom happens, according to my analysis, right, you guys know I've been calling for Bitcoin to get to around 12,000. When that happens, there's going to be lump sum buys at that level, all right, on top of the monthly dollar cost averaging. All I have to do is just be systematic in that manner and wait for 2 years or a year. It really doesn't matter. But the point is, look at Ethereum. Ethereum exploded this week, 44% up. I wasn't even looking at that chart this week. I just woke up to, some good gains. So The person who's going to win in this game is a disciplined person. The quickest way to get disciplined is to get systematized. Automate some of your things to remove emotion, delay, procrastination, analyst paralysis. It doesn't matter what the price is as an investor. Just DCA, dollar cost average. All right, so cash is king. You need to be getting cash. If you're not in that position and you don't know how to extract cash, you absolutely need to be learning how to trade the way we trade. All right, there's a link down below. I'm telling you right now, I literally do not see, I say this in 2020 and I'm saying it again, after the lost decade is done, and it might take the full 10 years, it might be 5 years, then recovery, then 2 years of a range in market, I don't know. But after this lost decade, wealth transference is done for a very long time. There are few moments in our lifetime where everything is just put on the table for those whose eyes are open and can see. All right, so let's get into it, ladies and gentlemen. I'm not here to kind of like talk forever. A couple of things, you know, BOJ, this last thing, BOJ, the Bank of Japan. I'm recording this on Saturday the 24th. I don't know when you guys are going to see it. Sorry, on Friday, sorry, actually, technically speaking, because I'm not around again. But BOJ, I say this at the beginning of the whole year. Watch out for the Bank of Japan changing its tone in October. I don't know if anyone heard me say this in any war room, but I've been saying this nonstop. Well, 7 days before the 1st of October, BOJ has come up with an announcement to say, look, man, since the Fed keeps hiking the dollar, and by hiking, we're talking about the Fed fund rate, right? On Wednesday, there was another Fed fund rate. Power went up by another 75 basis points and technically just promised to do a whole lot more damage. BOJ was like, damn, well, if you look at USDJPY, the dollar is just destroying the yen, right? So they've gone to kind of like make an adjustment. We don't even know if we should call it an increase in the interest rate, but they've moved positive in the interest rate for the first time since 1998, 7 days before October. And that's just the power of the analysis I was doing, right? I used supply and demand curve to get that date, right? Supply and demand curve showed me how overextended price would be, and it looked like by October-ish, right? You know, some bankers would be thinking about changing, you know, the state of the yen. Now, in general, it's too late, too little, too late. There's not much they can do. In general, when you try and prop up your currency to save your currency, there is very little you can do. What the Bank of Japan, in my humble opinion, needs to do is to do what everyone else is doing and focus on economic development, because recession is here. Global recession is here. It's not going anywhere. We're making things worse so we can live in a walking nightmare. Me and my partner are currently watching The Sandman, a series called The Sandman. And that's what it feels like right now. It feels like we are all in a world where our nightmares are currently living with us, all right? And so all central banks, if they're smart enough, are going to have to fight fire with fire. All right, you can't focus on your currency right now. All currencies cannot outcompete the dollar, fundamentally because Powell really started being hawkish first in March, even though he was behind. All right, so the catch-up game is done. Bank of England, too late, right? ECB, too late. BOJ, too late, guys. Everybody is now playing catch-up. And because of that, financial flows will continue to the dollar. It's that simple. All right, it's just a simple equation. So I just found that interesting that we called, you know, BOJ's change of heart, change of mind, and there it is. It kind of like happened that they've kind of like started to increase the interest rate. Right, cool. And then the other thing that we need to do before the war room was on Wednesday when I did the live stream. And if you haven't watched the live stream, you're playing, because if you guys don't learn to understand what central bankers are saying about the Forex market, stock markets, crypto markets, and how their policies are going. And if you keep telling, so when I host live classes, and I'm hosting my first live classes for the whole year on the 4th of October, you're going to hear me say this every single day we have class together on Zoom. Every single day for all those weeks, I'm going to be with you, trading live with you, teaching you. We're going to be making money as we learn. First, we're going to do trading psychology before we touch any type of money. Right, please make sure you register if you're not yet a registered student. 4th of October, I promise you there will not be another live class in 2022. I don't know when I'll do one next year. I used to do 3 live intakes the whole year. Now I don't. Until, because I've delayed so much releasing my module 3, I technically decided, okay, fine, let me do a live intake just so that people are feeding, right? So if you miss this bus, it's up to you, no pressure, but I won't come back, for a while. It takes a lot of time and effort now to do this live class with everything I have going on, but I love them. But you're going to hear me say this in my live classes if you attend. It's not hard, it's new. You have to sit through FOMC talks. It's not hard, it's new. What they're talking about, you're a trader. I promise you, support, resistance, indicator, it doesn't matter. The more you sit through these meetings, conferences, press talks, the more that language becomes part of your life, the better you are. You are only better at what you do with the more you know. It's life. It's like that. So please watch that live conference, right? So what I want to do real quick is pick up where we left off in that live conference. I said I was going to do a quick rundown of that, special economic projections document that Powell was kind of like speaking off on, right? I want to just talk about 1 or 2 or 3 or 4 or 5, 6, 7, 8 small things in that document. I don't know. It's going to be quite quick, right? Just to show you the difference between Powell in June, which is the last time he gave us economic projections, and Powell in September. Wait a minute. Banks think in 3 months, in a 1-year span, take profit in a 1 year, in a 10-year plan. Banks thinks in 3 months, financial quarters, have a tendency to take profits, change their minds, pivot in the market annually in a 10-year pre-played plan. So we want to see how Powell's thinking financial quarter by financial quarter, and he writes that stuff down in a document called special economic projections, which is what they use to actually justify whether they're going to keep hiking rates, the projections of how the year is going to end, where they think inflation is going to be. And I want you to understand that there was one page that rocked the market. One page that sent NASDAQ falling. We are in those trades because of supply and demand. Thank God. You don't have to know all this stuff to start making money. I'm here to give you value add. That's what I'm doing with these war rooms. Make money without spending money on signals, value add. Explain the market, value add. But you could just simply trade by mastering supply and demand. I'm here to tell you the stuff behind the stuff because I believe in that type of knowledge comes real power, right? So let's quickly have a look at that kind of stuff, and then we can then break down our 15 assets. Right. Oh, and by the way, I'm into the grayscale stuff. The grayscale video color. If it bothers you, let me know. If it doesn't, let me enjoy it for a while. Right. So before we start, man, I also showed you guys this document that I've been digesting for a while now. I'm almost ready to let it go. But it's basically on this old Bali Wyckoff. We did Wyckoff many years ago. When I was developing scenario analysis, those of you who get module 3, and I'll share parts of the stuff in my day trader series on YouTube, but a lot of it is going to be my module 3. You guys will know that I've already given you guys one video of a basic schematic, a really basic schematic on how to read liquidity. Very important video. You really need to try and check that out. Right, so just kind of like right click, somewhere up there and rewatch that video. So basic schematic, right? So Wyckoff is like the king of schematics. Some of his schematics still work. Most of them were designed in 1934 with bar charts and dot charts. So you have to be very careful in how you convert that supply and demand. So if you're a 365 student, patience to just wait for my stuff for me to roll it out for you nicely so that you don't confuse yourself. Right, but what's cool? Well, I know on Wednesday I got so excited about reading, when we're talking about the composite man, which is basically what he called smart money back then, right? And I forgot my main point. I just went on and on and on. But here's my main point. If you keep reading this further on, and just because of time, I'm just gonna, go ahead and try and search it. Where's the search bar? Look, supply and demand. That's my point, right? You guys want fancy stuff, man. You want new trading strategy, supply and demand in a 1934 document. Rule number 1, according to Wyckoff, he was one of the great stock traders, by the way, of that time during the Great Depression. He had over 200,000 students learning from a stock genius, right? People act like just because you're successful in trading, you can't teach people. That's dumb. That's stupid. If that was true, then doctors wouldn't teach other doctors, and mechanics wouldn't teach other mechanics, and you wouldn't go to school, and you wouldn't go to law school. It's just dumb. Just say you want to go it your way and learn your slow way or wrong way or whatever. But the point here is, look, the law of supply and demand determines the price direction. This is 1934. So it's not, when I say trade only supply and demand, is not the gospel of Leroy. Okay? It's how it is. It is how capitalism predetermines the price of an object. The price of rice at Pick and Pay is by the forces of supply and demand. Right. Anyways, the law of supply and demand determines the price direction. The principle is similar to Wyckoff's method of trading and investing. When demand is greater than supply, price rises, and when supply is greater than demand, price falls. The trade analysis can study the balance between supply and demand by comparing price volume bars over time. I've got a better schematic for it now, so don't worry about the bars and all that kind of stuff. This law, deceptively simple, right? I like how people can think they can watch a couple of YouTube videos and go become millionaires, right? Learning it to accurately evaluate supply and demand on bar charts and to understand the implications of supply and demand patterns takes considerable practice, right? So I thought that was very cool. And believe you me, it comes up thousands of times in this article, the power of supply and demand, like over and over and over, aligned trading ranges, right? Looking for that equilibrium in balance of supply and demand. Supply and demand analysis, it's just a big thing. It is a must-have in your trading. I thought I'd just bring that up again in case you think I'm just some crazy lighting skin complexion guy who is obsessed with supply and demand. I am obsessed with supply and demand because it changed my life. That's that simple. And I'm really hoping to impact that information onto you so it changes your life. By the way, if you already know what's about to go down in this war room, please like the video right now. If you already know you're gonna like the content, don't forget, just do it now so that later on, when you're done getting what you need, you have already liked the video, right? And if you're new, please don't forget to subscribe. June 15, ladies and gentlemen, Summary of Economic Projections. Just so you know, when this stuff came out, we got a 0.75 basis point rate hike in June, and this was the justification behind it, right? Right. So I want to do with a couple of things. I don't want to spend too much time on this document, but number one, remember we're looking at June, right? This is what FOMC got up and said. He got up and said, we expect the Fed's fund rate by the end of 2022 to be at 3.4%. So those 25 basis points, 75 basis points, 75 basis points, the interest rates that they've been, increasing throughout the whole year, they expected that in total will be at 3.4% by December. Just so you know, so you have it in the back of your minds, we are currently at about 3.2% right now, and I could be wrong, but I'm pretty sure we are somewhere there. But we can check. We got nothing but time. It's our war room. We can take it easy. Forex Factory, right? Some of you guys are not finishing the war rooms. It's up to you, and I'm trying to do my best to come back to them as quickly as possible and put chapters. But you are missing out on money. It's crazy how war rooms sales or buys get triggered when you least expect them. So I really hope you guys are not thinking you're so smart that you'll remember to come back and check your charts. I really hope I was clear about set and forget. There's no ways, I cannot remember. I mean, I've got the war room account, I've got my personal account, I've got my partner's personal account, I've got the flow account, my allocation of my trading flow. Then I'm managing 12 traders. There's no ways I could remember any of that stuff. No matter how naturally intelligent you think you are, you have to set and forget. There's no ways you could be possibly as organized, right? So there we go. So the Fed funds rate is 3.25%. All right, 3.25%. That's where we are at now after the Wednesday rate hike. Set and forget. You are leaving money on the table by watching war rooms halfway or no way or a little bit and then thinking, I'll just come back to this stuff. All right, set and forget. Calculate the accurate risk, figure out how many trades you're taking, figure out how much that's going to cost you before you set and forget. Calculate the adjusted risk and the correct lot size for each trade, and you set and you forget. When you get triggered, you forget. I'm the pilot. That's the whole point, right? If I accept all losses if they come, but I got stopped out of pound JPY that I remember. I got triggered. I'm in crazy profits in almost everything else. You have to be okay with that stuff, all right? Stop trying to control every single trade. You are not a robot, please. Right, so there we are. So this is where we are now in September. Think about this. In June, these guys thought by December we'll be at 3.4, but in September we're at 3.25. All right, we've technically already arrived at their rate, and so they say because we'll be here by December next year, we'll be at 3.8. And then in 2024 would go back down to 3.4. There are many other interesting things they said up here that we don't have time to deal with. For example, unemployment rate. We can look at that, right? They thought they'd have a flat unemployment rate of 3.7%. The more you raise interest rates, the tougher it becomes for companies. When things become tough for companies, there isn't a CEO in the world who's like, well, I already make millions, and I already own millions, and I already own the stock of my company, which is making millions. I might as well take away my bonus and give it to keep my business employing people. I might as well take away all the millions extra that I don't really need right now and put it in the wage book to keep my current workers employed. Most capitalists don't think like that. The first thing they think about is firing people, because that is the real direct expense to a business. Labor makes profit, but therefore labor is an expensive output, right? So unemployment is a natural consequence of tightening, of raising rates, right? So they thought, okay, fine, well, we'll have about 3.7% of our working population unemployed, and it will go up to 3.9 and maybe 4.1 as a result of how hard they tightened in 2022, which was, by the way, arriving at a rate of 3.4%. Now I'm going to switch over to the latest one, the September one, so you can quickly get a compare and contrast. This Wednesday, PowerWeezy showed up, dropped the rate, and then came to, he was different, man. You know, Powell had this aggressive energy about him that he should have had in March, right? We should have gone through this pain. You know, markets would have fallen 20% and most likely bounced back by now. Right, so this is the new one. This is June. This is now. Look now. Look who's crazy, because we called all of this. I called all of this at the beginning of the year. Like, there's no ways they're going to tame inflation. They are too far behind. Now they are saying, all right, we're going to add an extra 100 basis points. So instead of 3.4 in December, because we're already at 3.2, by December this year, we're going to get to 4.4%, which means prepare for more rates hikes. Not a Fed pivot point. I don't care what CNBC writes. Subscribe here. I won't lead you astray. I've been doing this for too long. Trust me on this. All right? That's number one. Right? They're not going to go 4.6 and then eventually get back to 3.9, but this is in 2024. Our unemployment rate is going to go up from 3.8 to 4.4, and then they're going to level it at 4.4. The Fed wants unemployment to be at 3.5. This was what Powell was proud about at the beginning of the year. Now it's interesting, right? Back here, 3.7, 3.9, 4.1. You can see unemployment has gone considerably high. We can talk about GDP. We can talk about all these weird things. Now, this we kind of expected. This, for me, was already priced in, to be honest with you. There's not much here. If you know how markets work, how to read your charts, fundamentals, all that kind of stuff, we would expect this behavior, right? We knew it was coming. But what dropped the markets was the dot chart, right? So this document is called the summary of economic projections, but on the streets, if you know your stuff, we also like to call it the dot chart. The dot chart, right? And I'm going to show you how to read the dot chart. It takes 2 seconds, 2 seconds, 2 seconds. Right, this is the dot chart. This is what rocks the markets, right? So let's go to the June dot chart, and we're going to look at, you know, this current dot chart. Ladies and gentlemen, this represents the 19 members of FOMC, right? This represents the 19 people who vote. This represents each dot. It's Powell, it's Bernard, it's all the people who are making this decision if to vote for them. That's what each dot represents. Where the dots are plotted is where each equal member believes the rate is going to be. Do you understand? So, for example, and I want to make sure I'm reading this right. This is 2022, right? Column 1 is 2022. This is 2023. This is 2024, right? So you can see this year in 2022, right? There are several members in June, this is a June document, who thought, right, the interest rate hike could get to 4%. One. You see that? One person thought, well, we could get to about 4%. 4 members of the FOMC thought, nah, we're going to be in between, you know, 3.5 to 4%. Maybe let's make this 3.8, you know, somewhere there. And then the majority of them thought, nah, what we're doing is enough. All right, this is kind of like how you can rank dovish or hawkish FOMC. How many? Because remember, the dovish guys don't want you to increase the rate that much. And about, let's see, 3, 6, 8. 8 of them thought, now, by end of the year, we're going to be at about 3.5%. Wait a minute, remember, and this is how you get to these numbers, right? This is how, you see, the final number was 3.4, right? So it's the majority, mean, average, whatever. That's how they get their projections done. So the majority of members in June, or within the 19 members of the FOMC, thought, now, rates would be 3.5 by the end of the year. And then another 5 thought actually rates would even be lower. So we didn't need to do much. This is a clear indication that the FOMC did not take inflation seriously, or the FOMC overthought its powers, had too much confidence in the little that they were doing. They thought they would have it under control. And then one thought that by next year, the rate would be at 4.5%. And then, you know, by next year, this would be happening here. And then the majority has slightly moved, right, to 3.8% next year. Now, let's see the dot chart, the new one in September. How things have changed. So once again, just so you understand, this is 2022, everything in between 2022, 23, 2024. Now, in September now, only one FOMC member believes, look, please, guys, mic check, you know, back home, my pastor used to say, or still says, are you with me or have you gone home? I hope you guys are still with me. This is not, you know, I always assume people are bored, but Alvin says this is good stuff. So I shouldn't assume people are bored. But then YouTube tells me people zone out as well. So I'm like, I'm worried. Right now, check this out. One person believes that, look, we're going to be somewhere here by the end of the year. Look at the difference now, right? About 4.8, right? 4.8. And then the majority now, last year, in June, was somewhere here at about 3.5. The majority now is here at about 4.4. So even the majority have moved up 100 basis points to where the year is going to end. And what freaked out the market is not so much this for 2022, because I believe 2022 has already been priced as a disaster year. All right, that's done. What freaked out everyone was 2023. That instead of, check 2023, one member of the FOMC was going for 4.5%. Now, 1, 2, 3, about 6 members within the voting range believe rates will be at 5. Right? Remember, when you get to this economic projection number of 2023, it's a median. It's all the different numbers divided by 19, right? It's a mean aggregate number, but there are 5 major hawks right now within the voting camp of the FOMC who believe the rate will be at 5% next year. and then another, is it 5 or 6? It's actually 6. I apologize. Another 6 believe somewhere here at 4.8 by end of next year. Okay, and then the Shire group, right? 6 here is in at 4.5%. And then there's always this one. There's one mega dovish person who believes now rates will be down at 4%, right? So anyway, this is why your markets got tanked, because markets look at something called the terminal rate, and the terminal rate is not spoken about a lot. It's actually kept in smart money circles within banks, really, because wallow retail traders with that information. But the terminal rate determines when rate hikes will stop, because that's when markets can pump again. All right, cool. Right, guys, so I hope you enjoyed this part. Now I want to get straight into giving you guys signals. I thought I'd break down this thing. This is the real main thing. You can then, go back to these things and kind of like see for yourselves the long-term speculation. And what I do is I print these documents, analyze them, and then wait for the next one to come in the next financial quarter. And you can actually see how quickly the Fed's mind changes every 3 months and how effective that change is to the markets. And I adjust my swings according to the wind. Like a sailor, you adjust your sails according to the wind, right? So today's war room, I think we should just go straight into that. I hope really people are engaged and they're liking the video and they are focused, etc. Right, so I really want to give you guys all the assets that I'm going to be looking into right now. As usual, work with me, every day, in every way. I'm getting better and better as a trader. You are doing it, man. You're watching my videos, you're getting better. You're thinking about this stuff, you're getting better. You're making affirmations, you're getting better. That's you. You are getting better. Believe you me. All right. If you're taking trades, you're getting better. If last week you only caught 2 trades, this week you caught 4, but lost 1, but won 3, you are getting better. You're now getting better at your FOMO, right? You should have a list of things you are targeting. You can cure yourself. You don't need a saver. You can really cure yourself. You can work on your trading and get better. All right. So this is pretty much your everyday, mantra, if you will. Foaming by the side of my mouth. It's important to do this simply because you cannot do anything that your subconscious mind doesn't believe. You will never become better than anything that's how you learned how to walk. Believe you me. No one taught you how to walk. It was embedded in your subconscious mind that this is how human beings move based on seeing the human beings around you. It's a learned behavior. Just think about it. No one really taught you the mathematical science of how to eat. You saw mommy, daddy, gogo, kulu, grandma, grandpa eating, and you started to eat like that. That's how human beings work. You got to program the subconscious mind to observational behaviors, right? So that's why you must write your affirmations, you must observe your affirmations, you must repeat your affirmations. No one can tell you how many a child from birth sees human beings walking until they turn a year, until they've gone through 365 days of a process. After the first birthday, or just before the first birthday, or just after the first birthday, scientifically speaking, humans get up and start walking, right? It didn't start there. Their subconscious mind had to believe it by seeing it over and over again. First you roll, sit, crawl. Treat your mind that way. Go back to your genetical roots of how you've learned anything you've done so well in your life. How you walk, how you run, how you breathe, how you eat, how you sleep, how you get up, how you sneeze, all these behavioral things that are so programmed in your mind, right? That behavior that is automated, your trading needs to get there. I promise you, you will be a beast. All right, starts with this. Every day and every way, I'm getting better and better as a trader. All right, so today I want to look at a couple of things, not too many, and I think it's going to be a nice and quick war room, man, because there's nothing, guys. All these assets now, we're all in. That's the whole point of a swing. Once you're in, you hold, you manage. There'll be opportunities to add more. Fantastic. Until then, you hold, you manage, right? The swing trades, I told you guys, there were only 11 perfect entries from May till now for Euro USD, right? If you missed a couple, entry number 11 is what we're holding right now, but we have to wait for weeks for that, about 3 to 4 weeks. So you can't miss the swings. You miss the swings, you're running into a panic. Then you have to switch off the swing mentality and get into day trading until the swings come for you. All right, so, right. I digress, but I'm happy. But because of what the BOJ has done, and I don't think it's anything major, all right, but they've done something. I want to look at a couple of JPY pairs, all right? I've got my eye on CADJPY today, pound JPY, because we, and I say we, those of you currently trading or following the war room, right? Sorry about my camera there, but it's fine. Right, so it's because I assume you took the trade with me as well, and if you did, we need to kind of like reassess why we got it. I got an SL. I don't remember giving this out as a war room trade, to be honest with you. I couldn't find record of it, but I know for a fact I put a pin in order. So I don't know if I was by myself or with you, but just in case, I would like us to kind of like look at why that buy failed, and it was such a city buy to take. But yeah. We'll talk about it. I know in a previous forum, we were waiting for much more lower buys. I just don't know if the buy I took was a buy that I told you guys to take. But just in case, we'll look at that loss, learn from it, but also map up the way. So I want to look at these JPY pairs first, only because the Bank of Japan is doing something new since 1998, and we want to see the impact it will have on markets. I'm not convinced it means anything right now. I really am not. But we'll have a look at those charts and see, and then straight after that, we'll then look at charts that we didn't get to finish last time before I had to travel. I'm in a similar situation today as well. Let's see. So we've got Euro Pound, Gold, Silver, and USDZAR. And then straight after that, we're going to look at Platinum because well, hopefully you're also triggered with Platinum. I noticed Platinum has been triggered for a while, and it's time to manage the trade. But also talk about, just the general commodity market, right? Following the tight lead of gold. Then we're going to look into some interesting risky assets, right? That are just dropping nonstop. And check on our good friend China 50, NASDAQ 100. Because if I don't do NASDAQ in a war room, it would be a criminal offense to many of you. SP 500, we're going to look at Bitcoin, US 30, and Nike 225. And you can see there really isn't much. And I would encourage you guys for the following war room that you guys actually in the public free Telegram group, just shout maybe on Friday in an organized way on Friday at a specific time at the end of the day on Friday, just punch out all the assets we want to look at next week, and I'll do that, right? Because right now, when I'm having a war room just for the sake of educating, spending time with you guys, but really all of us should just be holding and pressing our winners, calming our psychology, telling ourselves that there's more that the markets can give us as long as our analysis is sound, right? But yeah, so let's look at this chart, and then we take it from there, right? So the first one that we have is obviously CADJPY, but yeah, so this is the dollar. Oh wow, I don't think there's time to talk about the dollar right now, but the dollar broke a governing supply that we spoke about earlier on. I've already removed it from my chart, broke this governing supply, and is now approaching a new, a new high, technically speaking, or a very big monthly supply, right? So this supply that I've just tagged here, you can see it's a very exhausted supply. But before the dollar can get past the supply, there is a fresh weekly supply nested in there. So just be careful of that. This has meant absolutely nothing for the dollar. In the last weeks, we've seen the dollar arrive at supplies and act like supplies are nothing but just a waste of time. Bulldoze through those supplies and then move on, right? So there's just this weekly supply, beautiful imbalance that I'm looking out for, right? I'm not going to be a seller in the dollar. It's very counterproductive right now to my overall trading thesis. What I will be doing as usual is waiting to catch, retracements. I haven't been inside a dollar buy trade for a little while now, over 2 weeks or so, outside of my day trading. I'm talking about swings, right? The first time I experienced a swing from the dollar was really, I thought price was going to come all the way down here, and instead it created a new fresh demand, and since then it's been going up, right? So I'm still technically waiting to be, entered in, right? But they've been very clean intraday trades to take in this, and I hope you guys have been chowing this thing. But now buys are off until we see what's going on inside that supply, right? So anyways, the business of the day is CADJPY. It's not in the war room list, but we might as well have a look at oil. And that's because, CAD and oil go hand in hand, right? So we spoke about crude oil. We spoke about, long term we're selling, right? And I think I put up a post on the public Telegram group. I drew a line. I said this is the first, potential demand, but it looks very weak. Then it's the next area. I was very clear about the stuff that we're so focused on the headlines, and you're gonna end up drinking the sentiment juice sometimes. Don't forget supply and demand. Price hit a governing supply, it must drop. It must drop. That is it. It's just the law of supply and demand. It works all the time, like gravity, basically. Right. So oil is falling right now, and because of that, we've been expecting some, CAD weakness, and CAD has been also, separate, right? I showed you guys last time. I'm starting to remember, right? I also showed you guys the Canadian dollar index, and you can see prices dropping up until at least we can start to negotiate with this demand. Until then, right, I expect CAD weakness until oil gets to its demand. The distance is very similar between the two. I expect some weakness now. But between now, a weak CAD and a yen, a Japanese yen, that's just been slightly resuscitated. It's just important to double check what's going on here, right? So this is the governing time frame here. You can see I've got the chart marked up from the last time we spoke about it. So let's just quickly catch up with the analysis and see what's cutting, right? So we've been buying everything. We've been buying everything. XAUUSD has been a buy, fundamentally because of monetary policy divergence, right? Bank of Japan pushing the yen down, while every other country that we can think of has been kind of like propping up, the economy is trying to increase the interest rate, right? So it's been clean buys for a very long time. And now on the weekly time frame, you can see there was a broken supply here. Marked it out for you guys. I remember this forum. Marked out the buy areas, where price was going to be, and markets definitely missed us, or missed me. I don't know if you guys were in this one, right? This was obvious, but this was really hoping for a nice golden ratio H4 demand inside this area, and markets took it, but basically not enough room between me and my actual pinning order, and markets went up. And so this was easy to catch by intraday, but for my main swing account, I didn't have it, but for my trading flow account, I have it. So it's just based on you as a trader, I guess, if you manage to catch this. But the point here now is this fall of full retracement fall. And my opinion is, for now, I want to treat all these falls as retracement falls. Fundamentally, I think there's still a lot of work to be done, by the BOJ. One mini interest rate hike isn't going to do it. And therefore, you could, as a big risk, expect some move to the upside, right? But just be very careful. If the selling pressure is now enormously built in based on this, and we'll know in the next weeks to come, 1 week, 2 weeks from now, right? Then markets will then start to want to create lower highs, right? And so watch out for the supply here. Buying is not advised, fundamentally because there isn't really the perfect order block to do that, right? But just so you know, where price is right now, it is in a notorious place for a buyer's retracement. But I'm going to be watching this chart to see what happens there, all right? But in terms of buying long term, this has been very good. We spoke about closing any buys that anyone might have opened or might have had about a week or two ago. And you can see you've got the continuous breakup structure for higher highs. So for me, it's just it's a matter of when price does change its character on a time frame like the daily. That's going to take time to see. So I'll give it another week or two. But if price does retrace here, just be very careful. There's some sellers there. Yeah, there's some sellers there, and they, potentially might actually turn price, right? So the next asset to look into is pound JPY, and that's where I got sold off for 30 pounds of silver, pound JPY, and this was dumb. This was really really dumb. Um, Only because, look, man, there was a very deep entry there, right? So my stop loss actually got triggered here. So I don't know whether yours is not tight or too tight, or there's still enough room, but I don't really have a lot of hope for this chart in terms of how far our price could go. So just be careful of this. If your stop loss was not hit and you're still in price, and you open this chart come Monday and you think, well, maybe price might be able to move up a little bit to kind of like mitigate your losses, and you can babysit that, then I would babysit that as up until a point where you can quickly break even safely, right? But for me, this is a big loss. Not a big loss, but it's a straight L. Markets have decided otherwise, right? So markets faked out, broke out of the structure, right, faked out, and then came back all the way down, right? And if this isn't holding, and for me, I do believe that this demand has been broken, then we're now going back to wait all the way down here for these areas of value that we spoke about. Once again, remember, there's a reversal in the yen ever since that meeting. That one big red candlestick, see these two red candlesticks there? As soon as Powell on Wednesday said what he was going to say, that midnight into Thursday during the Asian session, the Bank of Japan was like, well, look at the USDJPY, the dollar is going crazy. We are now forced to do a yen recovery, right? So that's why our analysis didn't work, and that's okay. It's part of the game, right? Things do change on the field. You just adapt and adjust, and so that's why I think my stop loss got hit, right? So if you're in it and your stop loss has got more room to breathe and you've accepted the risk, then you can wait and see, right? Sometimes price does clear an area and then start to recover up. On the daily time frame for us to sell anyways, out of to wait all the way up there. So you might as well see if price will take you up there, or take my a similar loss like me and close the trade. Completely up to you. Right, but I do apologize, guys, as usual. Between my weekend flight schedules and getting up super early on a Saturday to go run workshops for institutions, I have to do things late at night because so I'm exhausted. So the yawning has got nothing to do with my passion or I'm bored. It's my body physically is extremely tired. I'm very stretched out. I am trying to do the most as I can, but I am here with you, right? So once in a while I will yawn, and maybe it'll be best for me to go off camera so you don't have to see it and feel disrespected, maybe, right? But yeah, so maybe let's do that. Let's go off camera. Let's keep stick to the chats. But I'm here with you. I'm very excited. Let's get this money, right? So pound JPY somewhere here. I do anticipate that markets might actually give in, right? So it's just a case of again setting pending orders. If you look on the governing time frame, and I'm going off camera by the way. If you look at the governing time frame on pound JPY, it's the same thing we spoke about. We made a lot of money buying this thing, by the way, in this war, right? When monetary policy divergence was the bag, right? This was nice, right? So now on the governing time frame, you can see, right, markets have arrived at the bullish engulfing pattern. What will happen now is which one of those daily demands are strong enough to hold. You can see here the other daily demands all the way down there. Or will this buy to where we were, where I was quite what stopped out, be good enough to hold? But again, markets technically speaking are above a weekly supply somewhere in here, and still to me looks like they've got room to go up a little bit, right? So that's pound JPY. Next up we have AUDJPY, another chart that is experiencing a turnaround from the last time we saw it in our plans, right? So close buy trades here. This was easy to say because I closed it and I told you guys I'm closing this a long time ago, right? So this is we haven't really been active. I haven't been active in this chart for a long time, but you can still see the same thing. Very much overextended downward trend now due to some slight yen strength, right? So let's go back now and let's assess how impactful this shear strength is, right? Price to me is, oh, really? Oh la la. Right. So some of these charts almost seem to have known that this was going to happen before it happened, right? Because you've got a, oh no, I lie. This is not a bearish engulfing pattern. This is not necessarily the best imbalance in the world, right? So I don't know. Yeah, maybe there's a supply in there, but maybe it's not on the government. So we'll see why it's drawn like this. Right, but it seems like markets have reached for some supply on the left and are also falling. I just want to quickly check on the weekly what's going on. Right, so the way it was drawn was just kind of like, really stay focused on this area of value here on the weekly supply. But if you draw the entire bearish engulfing pattern, so that's long wick, there you go, you get a unique touch into that area, right? So that's what happened. Price came into a supply, price is falling, and then obviously the news of BOJ doing whatever it's doing has obviously given it some slight edge against the Australia AUD. And I'm sorry guys, because all I'm saying right now is this is what's happening. I'm not really telling you what to do, and that's because I can't see clean levels, right? I can't tell you to buy anything here. It's not a clean level to buy from, not the supply and demand that I trade, right? So, for those of you who are risk takers, you really are looking at, even with pound, JPY, we saw something similar. You're looking at some type of coming back to these areas of values and selling price, right? Taking a chance that markets will bounce back, gain some 2 or 3 day strength, create a counter trend, and then you can start to sell inside those areas in AUDJPY. It's quite a risky trade, but that's what, to me, seems like that's the only choice we have left. But again, here I'm betting completely against the BOJ. And you can see very similar patterns, right? Also, this NZDJPY, we closed out a while back. Price was just fading. You can see this last time I was at the war rooms. I drew these 1, 2, 3 touches. Price was just fading to break through this area here at first. So that meant glass effect for us, which means it's not safe to use to sell. And you can see if you try to sell again, you were taken out, right? So we closed the buys and our price is extended down, right? So this will be a nice place to take another sell, right? Just depending on how far price goes. I'm pretty sure this demand is now very weak. And so imagine a situation where it's still some really good money, right? Price does something like this, you sell, and this is kind of like where our next stop would be, right? Something like that on NZDJPY. The next chart we have together is Euro Pound. Right. Euro Pound, look at that. Look at that beautiful candlestick. That is one big, strong green day, right? And it's actually at the demise of the Bank of England, declaring that, technically speaking, they're now in a recession, right? And it's like people like, no, duh, right? Not duh. But you can spend, I don't know, my partner on a Facebook rants, she wrote how much has actually been spent on the Queen's funeral, which is quite a lot of money. A massive population of people in the UK actually live below poverty line, believe it or not. Right, so Euro Pound, this is one of those, disappointing charts as well, because initially I thought that this was gonna go all the way down here. And I don't know why I put an X. Right, so it's just me actually wanting price to come here. All these demands are taken up, right? What price is doing is just hanging on a thread, like a broken promise of some sorts. But until then, ECB has shown up, trying to catch up with the dollar, becoming more hawkish, and so we've got strength again. So now we've got to trade what we see. And you can see on the governing chart, we've got this weird imbalance that was left and technically almost filled by, this crazy bullish month of September. And it always, the question is, where's price going? With Euro Pound, is it here? Is that accurate? I find myself doubting myself on this chart quite a bit. And that's because of how choppy it is, because of the use sometimes of broken levels. For example, a broken demand quickly patched up into another demand, quickly broken again, and then patched up. So I find myself constantly really sometimes second guessing the analysis. But right now, This thing is hella strong, right? You know, very parabolic in price, and which tells me that there better be world-class supply in here. Our markets are just going to go straight through, right? So just look out for that. I would be a buyer in this market. We've already marked out the zones. I'll wait for price to come back here. And, you know, personally speaking, right now, looking at it today, you know, this Friday market close, whatever, or what, I don't know what day it is, right? But date is there. I'll wait for this. I'll wait for price to come back here. Nothing here to be trusted right now. Let's wait. Let's wait to see if price can come back all the way down there. And then after that, we can start to map out, you know, the distance between how far price can go up. But you know, between these order blocks, right, you definitely get a fair 1:3 in there. So that would definitely be a good place to kind of like camp. That's euro pound. Next one is gold. We're gonna waste time with gold. I hope not, because I told you so. I told you, sell and hold, sell and hold. You should have, like me, 1, 2, definitely 3 good swing sells on gold, because I have been honest on social media, on the war rooms. There is nothing happening. It's gonna there's still yet to come another big retracement on gold, which I'm telling you to sell again, right? Gold, it has to go down. Fed tightens, dollar goes up, gold must go down, right? And I really won't let go of my sell on gold until we get down to 1.5. Believe it or not, and I know it's going to be a not. You're not, a lot of you are not going to believe it. I think 365 students have seen my real account on gold. I am still holding 2-year-old buys on this baby, all right? And the reason why I'm still holding them is because gold might never go below 1.4, 1.5, right? So if it does break, then sure, I'll get kicked out from my trail stocks, right? But I will still hold those buys. But right now, we're in some mid-term sales. These are very good sales, right? Until price gets all the way down here. It's very close to this weekly demand at about 16.42, and I anticipate there'll be some buying. Right, if you're one of those buyers in gold, buy smart, buy knowing that, you know, just outside your precious demand is a lot of sell pressure, okay? Whether we like it or not, it exists, okay? So that's gold. Nothing major, no new update. I'm still bearish on gold until price tells me otherwise. So that weekly supply is telling us that gold might want to come retrace all the way up there. So what might be wise for me to do, and let me write this down, is I'm going to take profit on all these trades on Monday. Yeah, I'm just going to close them. 1, 2, 3, close all my gold sales, right? Take profit, calculate how much I need to withdraw for crypto investing and do that. And then wait for a cleaner retracement all the way up here. I'm doing that because, you know, if you collect way too many demands in this area, if there are way too many demands, then obviously you start to get washed. Price can even come back and retest all these areas. It's just more of a precautionary precautionary measure, right? I feel like today I sound so, you know, unintelligent. It's really the fatigue, man, the fatigue, right? Look, if you look at your Fibonacci levels, the first retracement was at that 50%. Excuse me. The second retracement was at the PCP area, 0.38%, and now we are due for a golden ratio retracement all the way up here. So I would close, if you're holding gold right now on Monday, Tuesday, I would make sure I close if there are signs of price rejection here, because markets, you know, need to come fill this order, you know, at least this one, because this is at least the weekly one. Sorry, in line with weekly supply. Here I'm talking about multiple time frame confluence, right? So I hope that makes sense. On gold, I think it would be prudent to close these sales for now. If you're gonna buy at your own risk, I won't be with you. I'll be setting some new higher premium sell areas here, number 1, and here, number 2. So as soon as this is closed, I'll mark it close on the chart as well. But yeah, just watch out for gold because you never know how high price goes when it's due to fall. Silver is the next chart. We all should be in silver, and we waited for a long time for this one, right? So this is not a signal per se, it's just something for you that you need to manage, right? There we go. Right, so we got into silver here, and you can see prices at that Fibonacci range, 61.68. Right, I'm not making that up. There you go, anti-Fibonacci, bearish momentum to the downside, and you can see your 61.8% sits nicely, and you can see that price actually came back and created a new supply for you who's not in us, in it with us, right? And it was by luck that by the time I came back to close my silver, price was already moving up, and so I thought, well, let's see if I can get a retracement. Obviously, this position should already be protected, break even, some type of stop loss or profit lock. But now price has also given us a new, sell pressure point. So we're bound to see what's going to happen. A silver chart, when it looks like this on the daily, gives me hope that I might actually see more selling pressure from gold. In the least, just to finish the cycle, right? But just be very careful. But this is where we are with silver, right? So silver will always do what gold tells it to do. We're looking at USDZAR next because it's next, but also because I did notice that this week in the private Telegram group, students were talking about USDZAR, and I neglected to comment. I really enjoy when you guys talk to each other. And if there's something wrong or whatever, sure, I'll jump in. But it's really important that iron sharpens iron, right? And that's the whole point of a trading community, right? So I definitely don't trust any suppliers on USDZAR. Just to give my opinion, off the bat, I do not trust any type of supplies on USDZAR. I'm going to give you guys the weekly, perspective first. All right. Sure, we are getting into like a very, very big governing supply, so to speak. We were there, not too long ago. So you can see in 2020, right, during the COVID times, we arrived at this governing supply as soon as it was formed, and then price, ripped a new one and just dropped like crazy. And then now we finally steadily come back to this thing backed off the dollar strip, right? And there's a high chance, guys, that the dollar might open the supply. It's not easy with USDZAR. It will take a little bit of time, like a lot of time, but it is very possible that, price could bulldoze through it, right? But on the daily time frame, you can see markets seem to be prepping, right, for some type of catch, so that if there is selling from that supply, markets seem to be preparing that the selling will not be that deep. As you can see for yourself, demand upon demand, right, for Euro USD all the way down, right? So one of these demands is bound to have enough buy orders to hold price and push it back up, or in the least one of the first two, one or the second one combined, has enough to extinguish sellers. So this is a chart to look out for. But in terms of daily supplies, just to answer what was going on in the private Telegram group, absolutely not. There are none that I trust. I don't really see myself, taking the time to be a swing trader on USDZAR. To me, I'll be really tying down my equity, over nothing, right? So that's USDZAR done. Next chart is platinum. Again, this one is different. You should be in it. If I'm not mistaken, I'm definitely in platinum, so you guys should be in it too. Yes, I remember now. Absolutely right. So platinum, we plotted that. Simple, guys. Price has come back. We simply need to just break even. I'm going to make a note of that right now. All right. At some point in time, you might get something, similar to some type of movement. Just let it happen. But eventually, we do expect this price to give us problems from this area. So yeah, platinum's going to drop, and it doesn't seem like they have decided to leave us, a place to re-enter that particular market, except maybe for there. But that's quite risky. Platinum is going to move in line with gold, so please keep your eye on gold, and then gold will fundamentally help you kind of like navigate the sentiment or the driving price behind it. Right now, platinum, guys, in the governing time frame price, platinum was due, long overdue for some serious upward momentum, and we saw it happen for a couple of months. right? Platinum needs to return back to about 1,700, by the way. So this is going to be a very good buy when we're done with the downfall of gold, right? This is going to be a very, very good buy. You can see we had a couple of buys, a couple of sells, but for the most part right now, this might be a sinking ship based on whatever gold decides is the direction, right? So the next one is, you know, the Chinese index, the CN50. We spoke about it in a previous forum, right? It's time to come back, right? So this sucks because for whatever reason, I was never triggered. And when I came back, I saw this, and then I forgot to come back and put a pin in order. And now, markets have really extended to the downside, and I'm not really in this trade or in this particular market, even though I was clearly right that, price is going to struggle. There's a PCP somewhere there, and we're going to maintain some downward momentum. Unfortunately, I still didn't get triggered because I didn't place the order. And that's just how it is. Forget to sit and forget. You sometimes, 9 out of 10 times, must forget about profits. You must get organized as a trader. And I'm saying to someone who missed a trade, all right? But when I miss a trade, most of the time it's because I actually was forced to leave or forced to break my routine through a meeting or some small short trip, whatever it is. But you guys can nail this stuff. You must be brutally disciplined. Missing a trade is the same as losing money, because technically you are losing money. You never know how much capital you're going to need or equity in the future. So any money you're not making is technically should be registered mentally as a loss. All right, so stay organized, right? But yeah, this is China 50 falling, and I anticipate falling will continue. I anticipate that this demand that we're at right now is not really a significant thing to hold price. And I think this is by kind of like design, right? So where to enter, what to do. Let's go back to daily before I forget. I'm here for signals. Let's see. Right, for the record, I don't trust this supply, so up here is the better one. Up there is where I would wait. Here. Okay, this I'll stay away from. That's all I have to say about China 50. And to everybody's favorite, I think NASDAQ. I'm not gonna waste time, guys. There's not much. We've spoken about NASDAQ. We're in NASDAQ. We're holding NASDAQ. I've done a lot of content around NASDAQ. So yeah, I do remember on Wednesday someone asked me about a demand somewhere, demand one. I told you guys that demand one was going to get smoked, and it did, right? So I'm glad someone was brave enough to ask that, because I can guarantee a lot of people thought they would buy there, right? And you never buy in general when prices this overextended low. Number one. Number two, in general, the month of September is bad for stocks. Number three, in general, Friday is a sell-off day for stocks. All those three factors combined would have burnt a hole through that process, right? But NASDAQ right now, I'm pressing my winners. But some tight monitoring going on with the profits, and in the event that price wants to revert back. And the reason I'm saying this is because markets have finally arrived at where they started in 2020, when the Fed was giving them money, right? Markets have come back, right? Actually, some people are going to see a double bottom. Some people are going to see the potential of a W formation pattern. Whatever you choose to see, just so you know that the price has arrived at this area, and so anything can go. Any type of old school, out of the blue buying could happen at these areas here. So it's something to definitely be mindful of. But right now, to be honest with you, I do not see a perfect entry on NASDAQ, unless if you're a buyer and you're waiting for this area. I'm not a buyer in this market, right? SP 500. SP 500. We're almost there, guys. Just 3 more assets to go. 3 more assets to go, then we are done. I feel, fatigued, but I'm very happy, right? SP 500, right? Clean removal of demand areas. Price didn't make it back up there. This was what was tagged, though. Excuse me. right? And now we're just watching. We're watching to see. Remember, the first thing that we want to happen in S&P 500, if you're a bear like me, the first thing you want in the market is for a bear like me to come and announce that, hey, we are way past 20% again in the S&P 500, right? Again, we are now way past it, right? Last time we were way past this 20%, right? Which ends at this demand. You can see we're below that 20%. Markets did not like that at all. That is bearish confirmation on price right now. And right now, price is trading below, these type of levels as we speak. Okay, so this is bad for US investors, but it's all of how just right. So S&P 500, thanks for the clarity. That's something that you need to seek out for yourself, but there are some very good supply levels right there. Very, very good supply levels right there. Right. S&P 500 done. 3 more assets to go, ladies and gentlemen. I can feel I am fading. Thank you so much for watching. So don't forget to like. Let's look at Bitcoin next. The chart that keeps on giving, right? You wouldn't believe this. I found some old videos of mine for the YouTube channel that are absolutely crucial. So I'll be re-uploading them to the channel bit by bit, public lectures and all that kind of stuff. And I found me talking about Bitcoin last year, September, saying by this time we'll be here at 20,000. It's crazy, right? And look at the way we are trading at 19,000, right? So Bitcoin came in here, right? So the first video for my public lecture series, by the way, a must watch, is the tools of trading that we use in supply and demand. And one of them is the Fibonacci. Look at this on the daily time frame. No confirmation whatsoever, because this is a broken supply, so don't lie to yourself, right? There's some liquidity grabs here, right? Those are the schematic that I told you. But if you just use the simple Fibonacci and got that retracement, and you wanted a reason to take the trade, we never trade tools. We don't trade trend lines in isolation. We don't trade Fibonacci in isolation. But if you check on the weekly time frame, Bitcoin was actually simply fulfilling a law of supply and demand, a bearish supply being mitigated by a candlestick that created another bearish engulfing supply. All right, so that I found that so pretty, like that the way that price moved like that. Right now, Bitcoin is flirting, right? Keeps hovering above this so-called daily demand, and all we're waiting for personally is for price to then take all of this out and arrive at about 16 something to 200, breaking this final weekly demand, and then we can really say the road or the pathway to 12K, 10K has now been opened, right? So for Bitcoin, if you don't get it, then forget about it, right? If you're not in it, there's not much to do right now. There's nothing really I am that confident in you retracing into lower than maybe this point, right? So this is something that you need to wait for when it comes to Bitcoin. If you're already in it, keep the faith. Sorry, excuse me about that. The next chart, second to last chart, is US30. US30, all right, there we go, falling, dropping like S&P 500. We spoke about this the last time we were together. And like I said, US30 was a big problem. The very first time we're extremely bearish. And the reason for that was US30 was one of the few charts that was struggling to close 20 cents below previous all-time highs, etc., right? Because we needed to know if this asset had actually arrived in bearish territory, and it was taken forever. Now there you go. This is still 19-something percent, right? So 20%, markets definitely arrived yesterday, and then yesterday being Friday, and then actually closed on the outside of that 20%. Or maybe it's just how I've drawn it. But it's safe to say price definitely understands, how terrible it can be, like that, right? Terrible it can be for US30, right? So I'm not getting the perfect 20, but I'm assuming it's the human error with how I'm drawing this thing, right? So it's on and off. But yeah, price is extended to the downside. We're now in a bear market on NASDAQ, bear market, confirmed bear market S&P 500, confirmed bear market in US30, right? And that's not normal.
that's really not normal, to be honest with you. That's when you know things are terrible. And the asset that you want to keep your eyes on when trading American stocks, American indices, like I said, is the Japanese index, which moves first and fast and violently during the Asian session. I'm talking about Nikkei 225 or J225. And we've got three beautiful sales in there. I told you that price is going to come here to 28,600. Right, in one of my war rooms, I told you to wait for that. If price did literally come back, but we already entered here, then we entered there, and then technically speaking, there was another drop, right? And if you look very carefully, it's a drop within a drop, so just be very careful. But this is where price will try and come back to mitigate if there's ever a need, right? So look at how J25 extends itself, how it stretches itself, and you'll get an understanding of how far NASDAQ or S&P 500 US30 are willing to go. Right, ladies and gentlemen, thank you so much for watching. Thank you so much for enjoying. Remember, cash is king. Get cash. If you don't have cash, get means to get cash, right? And I'm talking about empowering yourself to extract value from the financial markets and make money, right? 365, shake my hand. Thank you so much. God bless. Have a good trading week. I'm out. Peace.